Hello investors, I'm here to give you another potential trading idea. This time we're looking at Upstart. So who are Upstart and what is the trade idea that we have for them? Essentially Upstart is a company that uses artificial intelligence to assess risk of people borrowing money. And their value proposition for banks is that they can evaluate credit risks and be more efficient with the profiling, because a lot of the banking profiling for risk when lending is based on a very old system, and artificial intelligence analysis can be a lot more efficient in terms of whether they should approve a loan and what the actual real risk of a client repaying the loan would be. So that all sounds fantastic, and it was very, very successful business. But nowadays we're living in an AI era where I'm not sure if the banks are not just going to want to develop their own AI systems, or if there won't be a lot of competition in this marketplace. So that gives me more of a negative potential sentiment around the stock. But it's not only about negative sentiment. We've got to look at the reasons, the fundamental and technical reasons why this potentially could go up or go down if we're going to make an investment, either trading on the upside or the downside, going long, betting with the stock, or going short and trying to bet against the stock. As I've said before, I'm not a big fan of shorting. It can be very risky, and if you do short, you must have very strict risk management controls in place and be aware of what you're doing. However, it can also give you some outsized gains rather than just having to depend on stocks going up. So what we know is that obviously quarter to date, Upstart has gone up by 40% in value. So nothing just goes up vertically without coming back down. So the question is this a moment where the stock could come back down? And we believe it might be. What are the technical data I'm looking at? Well, we see over 1 year they've actually reduced their headcount by 14%. That could be because AI is taking jobs, but it could also be that they're worried about the growth within their business. They also are actually losing money, $128 million a year in losses. Even though they do have revenue after taxes and everything else, they're actually losing money. Now, they are a 7 billion market cap, so it's not a big issue, but I prefer to invest with companies that are actually profitable. So if they can't turn a profit and if they increase their losses, there's another good reason why the stock might start to go down. So if we go and take a look at the stock itself, also whenever we look at this, we want to look at the financials, get an idea, do they have a good price to earnings ratio? Well, considering they're losing money, they don't even have a price to earnings ratio, and they haven't had for some time. When they did, it was extremely high. The next thing we want to look at is their book value, to see, are they trading at expensive book value? Well, yes, they're trading at 10 times book value. And really, if I was investing in a stock like this, I'd want to see at least 3 times, maybe 1 time would be a great opportunity. But at 10, 15 times, that's a very expensive multiple value on the assets that you are buying. So with all of this, it's kind of adding up to me that this stock is weaker than it is strong. So definitely my observation would be to look to bet against this stock and not to invest in this stock. Now we also see their net margin is negative, -1%. However, it has been getting better. So that could be a sign that they might start to show a profit. And if they do go from losing money to making money, that could add momentum to the stock. But for the time being, they're losing money and they don't really have a profit margin. So that's another negative for me. So what are we looking at here? Why could we consider shorting this stock today? And if we do, what should we be looking out for? One of the things that we look at on a stock is the relative strength index. So you can see here, based on the price movements, when it might be overbought or oversold. And this is a good indication as to whether you should maybe be getting out of the stock or not. So here, for example, we had a peak, and this was around a very high peak in the relative strength index. Then we have a dip down here, and we have a dip down here. That could potentially be a good opportunity to buy, especially as it bounces off this 200-day moving average. Again, up here we have a peak with the relative strength index being very high, turns into a big sell-off. Then we get a trough down here. If you'd have bought in based on relative strength, you'd have made potentially a small gain here on that period of time. And again here, low relative strength, low in the stock. If you'd bought here, you'd have made a very nice gain up here. But today, where are we? we're actually at this point, which is very reminiscent. If you look at the yellow line and the purple line, and the yellow line and the purple line, very reminiscent of what happened before the stock sold off here. So I think that we could be looking at a turnaround. I'm looking at a 4-hour chart, so every candle that you see here is a 4-hour candle. But what I do like to do is look at a 1-day chart to get an idea of the daily price movements. Now what we can see here is that there's a lot of actual price support here, resistance here, where the stocks have come up and potentially looked to be rejected. It's turned into a support level here, it's turned into a resistance level here, a resistance level that got broken. So this is a point in time where price has shown some level of potential resistance. We also see that when the stock extends significantly above the moving average, it tends to want to retrace towards those moving averages. So I wouldn't say I'm massively heavily convicted as I was recently with Tesla. Tesla added up in a much more favorable collection of data points for me to bet against, but this is definitely a potential trade. So for people wanting to make a short-term trade with a limited amount of risk, what could we expect here? If it does pull back, I think we'll probably pull back to the 200-day moving average. So we're looking at a potential gain there of 22%, which could happen very, very quickly. But we also want to make sure that we're not taking too much risk with our trade. So we'd have to put in a risk management, a stop loss. The stop loss could be, for example, here would be a very good stop loss because we had big rejection here, big rejection here, a big rejection here on price. So potentially this level around here could be where you'd want to put a stop loss. The problem is that would be a 19% loss compared to a potential 19% gain. And typically we want to look for at least a 2-to-1, ideally a 3-to-1 risk ratio. So I'm happy to lose money every now and then on a trade, knowing that in the long term I should be making money. So on this trade I would probably be a bit more conservative, and I'd maybe go for, let's say, a 9% loss for a 22% gain. It's not the ideal ratio, but from everything I've said, I've got a feeling that this run won't last forever, and we could start to see people taking profit. We could start to see what we call a head and shoulders formation forming here, where we've actually got a shoulder, we've got a head forming. So if this does start to come back down, then it could actually be a trend for further weakness coming down here. This is purely speculation. This is for people that like to trade. This isn't really for long-term investors and passive investors, but here's another idea, and I will continue to produce them to help give you insights into how to look at good ways to bet on stocks or good ways to bet against stocks, and what kind of fundamental and technical data you should be looking at.